That video gave me a good laugh today, and it caused me to think about the fact that Wall Street has a drawing, seductive chant. You want to kind of peer through and peer over the wall to something you don't really understand, but the closer and closer you get to it, and when you finally begin to take a risk position, sometimes you get that proverbial poke in the eye and you lose some money, and Wall Street just moves on and finds its next victim from 13 to 14, and there'll never be an end. Well, today, the market absolutely went on a burner up. I'm going to break down why that happened. But it was the bears that got the poke in the eye, because if you were expecting a pullback, it just never came. The algorithm seemed to be slowly pushing the market up, price point by price point, in a very tight pattern till we crossed over a critical line. You say, well, what line is that? Well, that's the island indicator line that I gave you guys yesterday. We did get over a critical level that could potentially cancel out that very bearish indicator that we talked about in the last video. Has it been canceled yet? No. We've got to get one more thing to confirm the bullish move up. What has the bullish move up been? Well, the S&P 500 went up 1.5% and the NASDAQ went up 2%. It was semiconductors and mega cap stocks that were pushing it higher. It's the Magnificent Seven that did very, very well today. What is the bullish narrative that's driving this market higher? Well, basically, the AI story is not dead. We're moving towards it at the end of this month when we get Nvidia's earnings. We're going to find out if that company that did the heavy lifting in 2023 and 2024 can continue to carry the markets all the way into the end of this year. Now, just for perspective, the markets went back almost 10% when they decided to go on a dip, and we've completely recovered 50% of that so far. Now, the question is, do we have enough momentum to get all the way back to all-time highs, or is this the point in which the markets slowed down? Well, they already slowed down, because I mention it all the time. A true bull run consists of price, trend, direction up with volume and with momentum, which is acceleration. Today, we didn't have the volume. Today, we went up quite a bit, nearly 2% on the NASDAQ and 1.5% on the S&P, but we did it on the S&P with 40% less volume, which means the bulls were moving, but they were at a trot, not a hardcore run. So we need to have caution, and I'm going to take you into the SPY and show you exactly what needs to happen for this markets to continue higher. And if we don't get it, you'll be prepared and know what will happen next. I'm going to take you guys into that. This is the Stocks with Josh show. Thank you for joining me. I'm going to talk a little bit about the way I felt trading this market and how my day went. I didn't have the best trading day that I possibly could. There was a ton of plays that I had been tracking, a lot of alerts going off. But for one reason or another, and sometimes just hesitancy and the feeling like I had missed the move, I didn't get in. And then it kept climbing and kept climbing. And I had it in my mind, well, I'll get in on the next pullback, but there was very little pullback today. And I found myself feeling something that I know a lot of you guys feel, which is the fear of missing out. Days like this don't come along very often, and you kind of want to be fully locked and loaded into bullish positions, and I wasn't. The best position I was in was Nvidia. I followed that one. I got on it in the morning. I've been holding shares and call options to the upside, and I'm going to show that chart to you and what I'm expecting might happen if we continue higher or get a pullback. But the bottom line is I was feeling a ton of FOMO, and that's probably why I picked that intro video, is that I was waiting and watching and hoping for a little bit of a pullback that never came. And in the end, I felt like I got poked in the eye as well, being too bearish. Guys, but I want to tell you how I overcame that. Well, I didn't overtrade. and I didn't make rash decisions. And I reminded myself of something that I remind you guys of all the time, which is that Wall Street will give me another great opportunity tomorrow. And I also took some time to assess what exactly was my expectation. Because if I'm hitting my daily goal, it's okay if every single time I take a swing at the ball, I don't hit a home run. There's going to be days you hit a home run, and you shouldn't be striving to hit a home run every single day. Sometimes you just need to get on base. I absolutely got on base today. It wasn't a losing day. I had a couple trades attempts on the SPY that didn't pan out, but the majority of positions that I had been in were winners. And so I definitely got on base. I just thought I would share that with you guys to just remind you that everybody struggles with these emotions. You're not alone. Tomorrow we get to trade again. Guys, if you want to trade with me and some of my crowned traders, you can do it by joining the ChartGoat University, which is the Stocks with Josh Discord. I'll leave a link in the top pinned comment. There was a number of beautiful wins made over there today. Okay, so why did the markets take off like a rocket? Well, basically, it was a soft PPI, significantly lower than expectation. In June, the PPI was 2.7. Here in July, it was 2.2. An incredibly good read, and the market loved it. Why did the market love it? Because it gave the market the assurance that the Fed would cut rates. And on that note, the expectation for a 25 basis rate cut in September went up to 100%. And so we are expecting a rate cut. Overall, the bullish narrative is that this is an election year. AI is still in play. 90% of Q2 earnings are in and 80% beat expectations, as well as the fact that we are on the path to rate cuts, which ultimately will be good for Wall Street. But what is the bear case and what is the bear concern? Well, it's the fact that we are at an elevated price point in the market still. We're only 6% down from all-time high. A lot of value's been priced into these companies already. And as we saw during this earnings cycle, that if anybody did not hit the ball out of the park, they got punished excessively. And the bears would also argue that you've got to be mad to invest in Wall Street right now because we could be on the brink of war. The Ukraine has actually invaded Russian territory. I don't know if you guys had heard that, but yes, they've actually gone on the offensive and entered into and onto Russian land. Now, Putin said, and again, this isn't a political channel or even a news channel that much, but I want you to know that Putin has already said in the past that if an invading army stepped foot on Russian soil, that he would release a nuclear bomb. And so that is still lingering over the marketplace. And it absolutely would be a black swan event if any aspect of this war escalated. And in addition to that, we're not just dealing with one war globally. We're dealing with the Israel-Iran conflict that can get out of hand very, very quickly. And so we're in a place where a lot of value has been priced in the market. Some would argue that the PE for the S&P 500 is at elevated levels, and anything could smack that down. And that's why the market is going to remain volatile for quite a while, which is also why you're probably going to get another opportunity to trade a strong trending day, either up or down in the days ahead. All right, I'm going to take you into the SPY chart and the Nvidia chart, and then we're going to wrap this video up. All right, guys, the last video you got from me, I showed you that we had this bearish island top, this gap up, and then it eventually followed by this strong gap down. And the big question is, how does this bearish reversal indicator get canceled? Well, it gets canceled when the price moves above the neckline, which I've identified as 541.40. Now, we've done the first step of confirming a breakout and a cancellation of this island top. Well, this is a great teaching opportunity because there's always two steps to showing whether or not a trend line is being respected, whether we're experiencing a breakout. The first is the crossing of the price. The second is an opening and closing candle that remains above the price that had been crossed. So it means that the price had previously been resistance and now it's operating as support again. We don't have leg 2 of the confirmation. However, we are sitting pretty nicely at the moment for the first step in canceling that bearish island top. So we've got to watch the price very carefully in pre-market tomorrow and tomorrow morning that it doesn't open back up beneath 541.40. If it does, that's an early warning sign. And if you marry that together with the fact that we had low volume today, which was low bullish conviction to the upside, then we do have reasons to remain on heightened alert. It is very good news that we are above the 21 EMA, above 539, because you can see every single time we get above the 21 EMA, the market typically rallies. And so if we can backtest this area and we can bounce from here, then yes, we're back in a bull run. But no, not necessarily out of a bear moment. So we've got to watch it very carefully. I know that some people got really scared after I showed them that indicator, but I can just tell you that the market's response so far was an algorithmic price drive up over those important lines. It could be another bull trap, but for certain, we should know by tomorrow, and I'll let you guys know what I see in the charts tomorrow. Let's quickly check out Nvidia and what I'm watching for there. Okay, I've got the full chart sort of spread out and brought up for you guys just to remind you what a beast Nvidia has been over 2023 and 2024. This thing has been an absolute rocket ship, and it's been on a burner for a long time. And I also want to point out some basic structure to you guys. You know that these structures that I point out in the chart, these are continuation patterns. They go to the upside. And sure enough, we came back. We hit the bottom of the structure that I gave you guys. I told you that my buy prices, I believe it was 2 Fridays ago, as we were getting near this dip, I said we were going to dip and hit the bottom of this channel. And I told you that I was picking up shares at $96 and $94. And the last time I covered Nvidia was right here. And I told you that the following morning, we had to get back above $99. And that would mean that the continuation to the upside was still going. We also had this mile marker of 110, which is the middle of the channel. And we blasted right above that. But now we've got to deal with another pattern that I've showed you guys that might play out. And that's this bullish inverse head and shoulders pattern. And I would actually love to see this play out, because the idea here is that if the markets do slow down tomorrow and we get a little bit of a pullback on the very powerful 6% move up that we've had over the last week and a half, then we could possibly come back and test the top of this channel. And if that holds as support, then it means that we could be good to get all the way back up to 122 on Nvidia. And that's the main thing I wanted to draw out for you guys today. I have since raised my stop loss to $109. It's right beneath this level here, and I'll be watching it very carefully. This is going to be another potential load zone. If we get the right candles and get a nice little bounce there, this would give us the move to the top of this channel, just like we got the move from the bottom up to here. And if we do continue to rise, moving towards earnings, there's no reason to believe that we won't actually break out above our channel. I failed to mention at the beginning of this show that some other interesting market moving stocks today was Chipotle and Starbucks. The CEO basically from Chipotle abandoned ship and went over to Starbucks, and the Starbucks shareholders loved it, and the stock popped 21%, even higher. And the Chipotle shareholders did not like the news, and their stock dropped 12%. I'm going to drop some technicals on both of those companies in the Chart Goat University, as well as the fact that the next video up that I make is going to be a micro class on moving averages. For the Discord, hit the link in the top pinned comment and come check it out and join that community of great traders. It's an education-focused community to help you learn how to navigate Wall Street and not get popped in the eye every single time you take a risk position. Appreciate each and every one of you guys. Hit that like and subscribe, and don't trade alone. Join our community, and we'll do it together. Peace and blessings. Take care.